I don't know. We'll have to fix that somehow. Oh, yeah, yeah. Well, we're not playing any music today. All right, welcome to the Option Genius Show. Today is March 20th, Friday, 2026. My name is Alan, but you can't see me today for some reason.
Alan the
Uh,
Ghost.
Alan the Ghost, my camera does not want to cooperate, but you can see Matt, so you can see the cute one. I'm the you got the cute one and you got the burly one. I'm the burly one.
I don't know. I'm pretty burly.
um, we got two burlies. But yeah, so today we're going to be talking about the markets and we're going to be talking about how to handle a credit spread gone bad. This was a question that came up yesterday in the coaching calls for the Club Genius. And we'll go into that and talk about different scenarios and how to handle that. But right now, Matt, we are looking at a major expiration day. There are millions and millions of dollars worth of options that are expiring today, and that is supposed to add to some of the volatility going up today, going up and down.
Great. Yep.
So right now, SPX is down 1%. Russell 2000 is down 1.7. Oil is up almost $2 is up. NASDAQ down 1.5. Dow Jones down half. Gold is down zero point 0.7. Silver is down 2.4. Bitcoin is at 70. So Bitcoin tried to jump, but it got stuck.
Up and sideways. Yeah, a little
Yeah.
bit. Yeah.
VIX is up 10% today at 26. And the OVX, which we mentioned on the last time, on the last show, is down almost 4.5% today. So it's down to 88 after getting to a high of 125. And 88 is still extremely, extremely high, but it
Extremely.
is coming down.
Yeah.
So it's been down several days in a row. Um, and I guess that is just the opposite of the knee-jerk reaction about the war. And so now things are calming down.
Yeah. I also looked at so we have golds going down. A lot of it, I think they're rushing into bonds, right? It makes the dollar stronger. So you see a little bit of a downward push on gold. And I think Bitcoin mirrors that a little bit as well. When you see that kind of action going
I
on.
have no clue what's going on with Bitcoin. I mean, it
Yeah,
should
I mean
be,
it's such a young asset, so it really is. Some people say, "Oh, it behaves like a tech stock, or it's this or that." So, um, I think it's just such a young asset. It's only what 17 years old, so it's really just kind of finding its way and what people really understand, whatever it is, right? So, the debate rages on. So it sells off in a big way, it gains a big way, relies on sentiment. So totally different than other assets, right?
yeah, yeah. I mean, it's supposed to be the digital currency, something similar to gold, it's supposed to be a safe haven trade, but that's not working. Um,
And it might be in the future, right? But I think it takes a while for that to materialize, right? Because if you
I
really
guess.
pan out, not really anyone really understands what it is, right? So there's all this debate about what it is.
Yeah, that's true. It's just
Yeah,
something to trade at this point.
right. If you go down the street and ask, the general person, do they own Bitcoin or do they even know how it works? They're going to say no, right? And until that changes, then it's going to be a volatile, something to trade on, right?
Yep,
So.
yep, that's the case. But let's see. So does look like the S&P will be closing lower today. That makes 4 weeks of the last 4 weeks that the markets will be closing lower.
Mm-hmm.
So now
Becoming the story, right? We're down for the year.
yeah, we're down about 6% from the all-time highs, 6 or 7%. We're heading towards that correction level. And there's more and more people talking about recession. I believe Morgan Stanley came out and said their case is about a 30% chance of a recession. And the calls are recession are getting higher and higher. We do have troops heading towards the Middle East. 2,500 more Marines are going there, so there's more troops in the area. Um, Israel is calling for regime change, and that they said that the only way that's going to happen is if there's actually people on the ground doing it. So
It's no surprise, I think, right? From
it's like,
Israel's point of view.
yeah, it's like, where are those people going to come from? Um, so it might be U.S. troops, it might be the people of Iran that are rising up. We don't know, but you know, a lot of times that doesn't work out really well. You know, and you have a people-led revolution.
Hmm.
The country is just in a mismatch for long, long periods of time unless there's a strong body that can take over. Now I know there's that the royal family of Iran that was kicked out. You know, they're living in the U.S.
Hmm.
Um, who knows if they have enough connections to take over the country or rule it, or if they're even going to be put in charge. You know, so but
A lot to be worked out, but it is telling that, we're adding troops over there. They're headed over there. I think that just came out today, right? Additional Marines?
additional trips, yeah. So,
Additional, right? And it's no small amount that are headed over there. And you can just see this escalating, right, to some degree.
yeah, I mean, there's 2,500 more coming or going. And I think they had 2,500 originally, or so it's less than 10,000, for example. You know,
Hmm.
that's not enough to take over a country the size of Iran. So will they be, it might be a small operation, maybe. Maybe they're trying to take over that little island. You know, that's where Iran ships most of its oil from. That is a big choke point for Iran and their oil. Maybe they're going to try to take that place over. Now that supposedly that place is booby trapped and very, you know, the defenses are really good there, so that's going to cost a lot of lives if they do go in there. But maybe that's what has to be done. I don't know.
Yeah, I just think the whole messaging, right, around the war has been the problem, right? So it's like, okay, yeah, we don't need your help. Now we need your help. It's just like all this mixed messaging. And I don't know how they work this out, right? I mean, it's you know, we'll see, right? Day by day.
Yeah. So we're looking at the market head lower as the day progresses. Market power numbers at 0.88. So we might hopefully
Yeah.
we'll get a trade for today. Um, the Phoenix has been doing well. How'd that work out yesterday or this
Phoenix
morning?
did well, yeah, on the last one. We're still in a trade today.
Okay.
So we'll see how that goes.
All
Um,
right.
been a little bit uh the double dip, right? You think with all this volatility we'd have more, but that can change very quickly, right? So be ready to do that,
Yeah,
especially
so
next.
we had one on Monday. That was temporary. A couple people got that one. And then on Wednesday, we almost got there at the end of the day. You
Yeah,
know?
very
It was like
close. Yeah,
almost 0.7, 0.97 or something like that. And then
I think it was like 0.99. It
oh
was so
really?
close. Yeah, for like a brief second. It's like,
Yeah. They're like, oh man, I should have taken it.
yeah,
But
and-
yep. So hopefully we get one today. And you know,
but it's
it's
exciting. Like the prospect of this trade, you get a litany of trades in a week, right? So it may be a little slower this week, but next week you could have, potentially 4 or 5 trades, right? That's what can happen.
yep. Yep, yep, yep. So let's get into this. Hey, David, how's it going? David says hi. All right. So you said there yesterday on the coaching calls there was a question that came up that you wanted to go deeper into. So what's going on?
So it concerns like when you're putting on a credit spread, for example. So we put a credit spread on Starbucks, right? And we did this, I believe Tuesday, right? So just a few days ago, early on in the week, and we did a 90-85 put spread on Starbucks, right? So, as soon as you put a trade on and it gets challenged, right? We have a big down day. You're trying to figure out what is challenging the trade, whether it's the larger market or whether it has something to do with Starbucks. A lot of people will say, okay, I have a stop loss. Do I get out if it gets challenged, and do I get out right away and stick to the rules about getting out of a trade that early on in a cycle of a trade? So if it's like a 45-day trade, do I get out on day three of the trade, right? Do you? And what do you decide to do based on everything that's going on in that trade, right? So it becomes a little bit gray, I would say, about whether what you're going to do, right? As far as exiting the trade.
Okay. All right. So in this case, we sold put options. So we thought that Starbucks would go sideways or mosey higher, right? I remember we put this one on Tuesday, like you said. There was actually a uptrend that I kind of laid out, and that uptrend was broken pretty much the next day on Wednesday, right? Wednesday, there was a huge move down.
Yes.
I don't know if it hit the stop loss or not.
I can say it did not, right?
Yeah, I would assume it did not because when you put a trade on, if it's a trade with several days to expiration, like around 30 days, I think that's kind of what we had. We're in that range,
Mhm.
27, 28, 30 days, somewhere in there. If a move happens right away, you will not hit the stop loss because there's still plenty of time for the trade to recover. Now, if you were in a weekly trade, you'd be toast. But a monthly trade, we were still pretty far away from the price action. And so the because of the drop, you have volatility go up in the stock as well. So that adds a little bit to the loss, but you probably won't get there to the stop loss, you won't be showing a big loss right away. Now, if you're in the trade for a couple weeks and that happens, maybe a little bit different story. But if it right off the bat, if you're in a bad situation, it will not kick you out of the trade right away. But then you have to realize that, okay, hey, this trade is heading in the wrong direction quickly. We need to do a little bit more research and we need to figure out, like, okay, even though it's not hitting the stop loss, it's not doing what we want it to do. It's not behaving. And so should we exit early in that case? After one day, I kind of don't ever think that I want to exit a trade unless something has changed. So
Mhm.
if you have a big move, right, up or down in a trade, you want to go and find out, like, oh, what caused the move? I did not see any headlines about Starbucks.
So I can add a little context to this. We did figure out what it was, right? So I agree. You're first looking at, is this, in my mind, is this a downward move because of the market, right? Everything's going down, or is it something that has to do with Starbucks? And in this case, it was a analyst that did a downgrade to Starbucks, right?
Okay.
So that was the reason for that downward, and probably a little bit of the overall market to some degree, but it's those two forces, I think, that brought Starbucks down to where it was.
Yeah, so it looks like here RBC Capital downgraded Starbucks and but it kept the price target at 105.
Right.
And right now the stock's in the 90s, so it still think it's going to go up, but it downgraded to sector perform. So that was the reason. Now, is that anything to do with the company? Did that change anything fundamentally with the company? I would say no. That happens. They go up and down. Um, and so the next day, we saw the stock rally. It dropped 5% on that day on the downgrade, and then the next day it was up 3.4%.
Right.
Today it's down 3% again. So it might be a little bit more than that. And right now the trade is down about 13%. So still not at the point where we would get out yet. Um, but it is only $3 away from the short strike. So
Right.
this is concerning. It's definitely something that we have to keep an eye on, and that's why we also uh, use the moving averages when we're choosing trades. And so there are the 100 and the 200-day moving averages that are in the vicinity that might act as some level of support that might keep the stock from hitting our short strike. Now, maybe not. We don't know, right? Nobody
Yep.
can tell. Sometimes these things help and sometimes they don't. So it's not a guarantee. But I would say that if the stock continues to go down, I would probably exit even before a 25% stop loss just because of the volatility of the movements, right?
Hmm.
You get in the trade, you have a 5% down day, then you have a 3% up move, then you have a 3% down move. That is this trade that is not behaving in the way that it has behaved in the recent past. It has woken up, it's behaving differently. And so for that reason, I might just pull the plug early and get out instead of waiting for a 25% stop loss.
Yep. So those
Um,
are all the things that, you have to think about, right? It becomes a little bit more of a challenge when the trade, I think, goes against you early on in the trade cycle, right?
Yeah, and that's another reason why we use something called time diversification. We don't put all of our trades on at the same time. Because
Yeah.
anything it could be that, oh, the market dropped and then Starbucks dropped with the market. That happens a lot. In this case, um, not exactly, but if we had put two or three trades on, or let's say we're doing 8 trades for the month and we do all of them on the same day, and then the market drops, then would be in trouble on all of them at the same time. So we kind of diversify ourselves in that regard using time. But in this case, like I said, as soon as you get in, you're kind of protected for a little bit,
Mhm.
even if there's a big move against you. Then you have to realize, okay, what happened to the move? And right now we found, oh, it's an analyst. So it's not something negative, or it's not something guaranteed to keep sending it lower. And then the next day, like again, I would not have gotten out that day. I would have waited at least a couple of days for the stock to tell me, hey, how's it going to react to it? Yesterday was up, today is down again. So after yesterday, I would have said, "Oh yeah, this is a non-event. The stock is going to go back up." But then we have today, where the stock is actually moving with the markets, so it is now concerning to me.
Right. So it's like you have to, when that happens, like we're talking about early in the trade cycle, you have to be a little bit more active in how you watch the stock, right? That's just a fact.
You can
And
give it a little bit of room,
yeah, you
though.
give it a little
You can
bit.
give it a little bit of time, but just because we're saying that, hey, we have a stop loss at 25% doesn't mean you have to wait till it gets down 25%. You
Right.
can exit earlier.
If you
Um,
do that, sometimes it'll be too late, right? You have that last move and you're like, oh, I'm going to get out 25%. All of a sudden, before you know it, it's 30%, right? Or 35 or 40, right?
yes.
So it's important to manage the trade, right? Get out where you need to get out.
Mm-hmm.
I
Yep.
always tell people, I always tell traders, like, a lot of us, we trade in like kind of a perfectionist mentality, right? And it's like, oh yeah, I'm going to get out at 25% loss. And it's important to think that if you get out a 27% loss, right, it's not a terrible trade, right? You're trying to keep it within that amount, right? You want to manage the trade the best that you can. So if you're getting out at, you know, 18% loss or 22% or 25, 26, 27, just make sure it's not a 40, right, percent loss and a 50% loss. Those are the ones that really kill you, right?
Right, but I think some of the people they have a aversion to losing. And so when it gets down 10%, 15%, they start freaking out.
For sure. Yeah,
Even though the rule that they've, agreed to is that okay, I'm going to get out at 25, but when it's down, when they see like today, the trade right now, we have $1,000 in the trade and currently it's down, $125. So they're like, "Oh my God, that's 15%. That's huge. Oh, this is going the wrong way. I can't take it. I can't sleep." If that's the case, then you're gonna have trouble trading, right?
You are, yeah, you will continue to have trouble, right? Because some trades, right? There are trades that something you do everything correct, right? And they're going to be, you're going to lose in some trades, right? That's the whole idea. Um, it's all about how you manage those losers, right? And looking back in totality of all your trades and where you are, right?
Mm-hmm. Yeah. And so another option would be, oh, hey, so the trade's going bad. Do we do an adjustment? That is something that could be done. In this case, so like what are your possible adjustments? Number one, we would look at, okay, we can take our put spread and we could roll it down, right? We can move it further away from the money.
Hmm.
But because of the velocity of the trades, of the moves, 5%, 3%, 3%, I don't think that's a good idea because the train is coming pretty quickly. And
Yeah.
so if you were to move your stuff down, even if you're down $5, you know, like you move your short strike $5 lower, that's 2 days. It could be there. It could move to down $5 in 2 days. So you're not buying yourself a lot of time. On the other side, you'd be like, well, what if we turn it into like let's say a condor and we had some call spreads? Well, again, the same thing. Yesterday, the stock was up 3%.
Yeah. You could come
So
that way, right?
it could be up 3% tomorrow and the day after. And so you'd be on trouble on the upside. And so that's why sometimes when we adjust too soon, then we get in trouble because now we're like, especially if we're adding and turning it into a condor, now you have the risk on both sides. So in this case, I'd be like, probably do not want to adjust this. If the moves next week settle down, so we start having, like 1% moves or less than 1% moves, then I think an adjustment makes sense if we need to. But if it's moving 3% a day, it's better just to get out and move on to something else.
And also say, I think it's a little easier. Well, you have more options to adjust earlier in the trade cycle than as opposed to late, right? Because it's a little hard to do as you get further in, I'd say.
Well, of course, because
Expiration, right?
because of
Yeah,
the you don't have enough
exactly.
time and you don't have enough credit when you're moving it. So
Hmm.
that's definitely a case. In this situation, we have plenty of time left to adjust it. So, um, but the question is, should we? Is this a trade that should be adjusted? I would
Right.
probably say no because of the moves. If the moves were smaller and if it took like, 2 weeks to get to this point, then maybe I would take a look at adjustment. But
Yeah, it's always good to look at it, right? And see what you can do, right?
yeah,
Even if,
yeah. So
right, no problem.
in reality, the stock was about 98 when we got in. Now it's at 93, so it's dropped $5,
Hmm.
and we're still $3 away from the money. So it is somewhat in the range. And the average true range right now, it's coming in at 2.9. So that's telling us that it's going to move around $2 or $3 a day. So could we hit our short strike Monday? We could.
Yeah.
Could the trade be out of trouble in 2 days if you have two up days? Yes. So for that reason, just hold on to it right now. Nothing really to do except monitor and watch it. Even if we hit our short strike on Monday, let's say, we might be about 25%, right? So that might be like, okay, hey, let's just get out at this point. It didn't work out. It went straight down. At that point, I would get out. But at 15%, I would want it to give it a couple more days for it to tell me if it's going to work out or not. Now, um, my sixth sense or whatever, my inclination, my gut is telling me this trade probably will not work out, but I could be wrong. We don't know. And that's
Yeah,
why
but you
we
have
hold
to,
it.
even with that, it's like you have to give it, like you said, just a little bit of space to tell it, right? To tell it what it's going to tell us what it's going to do, right? Um, But I agree. If it's that case, and it reaches that level, then yeah, it's probably best to get out.
But
You
other than
get trades
that,
like this every now and then, right? That are just challenged very early on in the trade, right?
yeah,
There doesn't
it's not
happen all the
that
time.
it's yeah, it's pretty rare. This one we were looking at it, and I'm not sure if I like. I don't remember how much we liked this trade when we got in. It wasn't it wasn't a trade that we totally fell in love with. But it did look like I did not think we were gonna have that much trouble with this trade. But
No, of course, right? I mean, it checks all the boxes, but that happens. It's part of trading, right? So.
yeah. Mm-hmm.
But
Yes.
I do agree with you. You have your like A and B trades, and they're not all your trades aren't going to be A pluses, right? As far as the trades that you put on, right? And in my mind, this was a little bit lower than an A, right? So um, sometimes it works like that.
Yeah. So the other trades are still doing okay.
Yeah, and
Uh
I was just telling, we were talking on the calls, like here we are in this tumultuous time. And really, that's the only trade that's giving us trouble, right? So there's a lot to be said for that. So, like I was saying, you have to be very selective in this time. You have to find really good trades that are working, right? And make sure that you're diversified across trades, doing puts and calls, different time lengths, looking for trades that will potentially work out based on what's happening.
yeah. And so this one, if you're taking a look at the charts or whatever, there was some support at around about $92. So hopefully it doesn't go below there. And then you do have the moving averages that are hopefully going to help you out. So it might bounce off of that. Um, and those are the things that you're looking for when you're putting on the trade to help you. Obviously, you don't want to be behind the eight ball 15% down in 2 days or 3 days, but sometimes it does happen. And like you said, you have to give it a little bit of room to move around. And this is one of those situations where, like, hey, the trade did the opposite of what we wanted to do, but it can still work out.
Yeah,
Uh,
the point is you just don't overreact to what's happening, right? Yeah, gotta get like we said, you gotta give it a little bit of space.
yeah, you take the discipline out of it, or no, you put the discipline in it, you take the emotion out of it,
Mhm.
and you're like, okay, it is doing this again. It didn't never hit the get out point, so you're trading it right. But should you get out here down 15%, you can make a case to get out. I would probably want to give it another day or two and let it tell me what it's going to do. If it goes down again on Monday, we probably get out.
Yep. So that's how I look at it. But
Yeah.
it's really good to talk about like we're doing because these are all the th questions that answer your mind when things like this happen, right? And like I said, this doesn't happen all the time, right? There'll be a few trades that happen like this, right? And they're few and far between.
Yep. It's always good to it's always good that you can have a live situation and talk about it. Be like, hey, this is happening in this
Mhm.
trade right now. So this is one of our trades in the credit spread mastery program that is still running. This is it's gonna be what, week four? Uh I think.
Yeah,
Week four?
I think yeah, week 4 is coming, be
Yeah.
Tuesday.
So
Yeah,
Tuesday will be week four. We've put on several trades. A couple of them have already come off as winners. And this is the first one that is testing us. So this is going to be, we're going to be talking about it a lot on Tuesday and really going through the different scenarios. If we're still in the trade on Tuesday, then we'll probably even look at adjustment scenarios as well. So that's just something that we cover in the course. So part of it is live trading. So we put on trades live, we watch them, we manage them, find them, and we talk about them together, and then we see how it works out. So that's the fun part of it. Bad part of it is sometimes when you lose, but then as a student, the students they get to see, you know, it's good for them when the
it
trades
is.
lose.
Well, it is called credit spread mastery, and that's the mastery part, right?
Yeah.
So,
Yeah, if
um,
every trade worked, then you wouldn't really learn. But
yeah, you wouldn't learn at all.
um, And I know in the past when we've done this class, like sometimes I've put on a trade just to get in trouble, be like, hey, we've had too many good trades. I need to do a trade to get in trouble to show you
Yeah, and then
guys.
you can't get in trouble.
Yeah. So like, okay, I need to put on a bad trade. Don't judge me. I'm just putting on a bad trade so you guys can have some experience with adjusting. So
Yeah, yeah, that's all part of it. But this is a good example one that we will talk about. Yeah.
yeah. See.
So
All right. So other than that, it's another down Friday.
yeah, it's starting to take a tumble now.
Yeah, and the speed is picking up. So we'll see how it goes over the weekend. We'll see what they do with the straight situation. Um, the rates have been going higher and higher, and the dollar's getting stronger as a result. That's pushing all the commodities lower. Um, Interesting situation. Hopefully it ends soon. Permanently, everybody is, kumbaya and peace around the world.
Yep, cool heads prevail. That's what we need.
But we'll see what happens, and market continues to drop lower. So where are we now on a market power day?
I think we might be there. Let's see.
Uh, where's the thing?
Mm,
Yep, it is. It's a 1.03 as we're speaking.
Oh, yep, it certainly is.
So it's 1:35 my time, Central Time. I don't
Be a three
know.
DTE trade.
3DT trade. I want to double dip. Can I double dip? I don't know.
It's pretty late. Pretty late.
It is late. Let me see. Let me see what I can
What is
find.
your time cutoff?
It should be about 1:30. Um, Now, so we hit a low of 65.13 about 12 minutes ago. And it looks like we're going to hit another low. So if we keep hitting new lows, then I can't put the trade on.
Right.
Yeah, we just hit another low. So I don't have enough time to put on a double dip today.
Looks like we're easing into a possible classic trade.
Yeah, we'll have the classic hopefully, unless we turn around. Um, but let's see, if we did a double dip, where would it be? Um,
I'm going to see if I match up with you here.
uh, where would we get? What? Oh, wow. Oh, it's gonna be really close to the money.
Yeah, there.
That's weird. Okay. I like to be a little bit aggressive on my double dips. Um, but this one I'm looking at, or maybe I can get a little bit further away than this one. Hold on. I think I'm looking at 64.75,
Yeah, you are going a little bit
64.70.
closer. Okay.
Yeah, 64.75, 64.70 gives me 40 cents right now. Um, but that's 35 points away from the money where we're at.
Still dropping now.
But it's still dropping, so
Yeah.
I would not do this right now.
Yeah. Very interesting. Let's see, the VIX pop up. Yeah, oh yeah. So the VIX is up to 27.54.
Yeah.
So interesting.
Most likely this is probably some reaction to expiration day, right?
Yeah.
We're getting close to the end, so people are getting out of their positions and the market makers are trying to balance their portfolios.
Yep.
Um,
Rebalancing.
yeah, so we're working on level 9 in Club Genius. And Club Genius, basically, it's built on the option continuum. So you take a quiz to tell you where you are on the continuum, and you get placed in a level, and then you move your way up to get better and better at trading. And level 9 is still not complete. So we're adding some stuff to it. And new lessons is about market makers and how the market actually works. So it's an excellent lesson, actually.
Yeah,
Um, I'm really proud of it, where it goes through it and it talks about, when when the markets, how do they, when they drop so quickly in the daytime or think in one day, why is that actually happening? And how does pinning work? When a stock or an
yeah, yeah.
index goes to one particular price and it just gets stuck there, why does that happen? And how can you tell it's happening? And how can you tell what the market makers are doing? And it's all,
Fascinating, right?
yeah,
Yeah,
it's all like second level stuff, right? So you have first level stuff is what we were talking about earlier, which is like, okay, we're looking at this one individual trade. How is this working out? What's the price? Da da da. But then you look at the second level trades, which are based on the entire market. So you're not looking at one particular stock, you're looking at everything all together. And you're looking at the VIX, you're looking at volatility, you're looking at the Greeks, you're looking at what the other participants are doing, what the market makers are doing, what the hedge funds are doing, what the retail traders are doing. And that's really taking it to the
right.
next
Huge
level.
movements of money, right?
Yeah, no, I mean, huge movements of money, but like you have a better understanding of how and why that's
Mechanics,
going
yeah.
on.
Yeah.
So that was a really excellent lesson that we put together this week in level 9, and that'll be uploaded soon. Um, but it's very fascinating. Like you can keep learning about the markets until there's nobody that knows everything, you know?
Right. It's like going under the hood of a car, right?
You
You're
just
finding
keep
all these
learning and
different
learning and learning.
the rabbit hole that never ends, right? And that's exciting to me, right? It's all this discovery all the time.
Yeah. Sweet beans. All right. So that's it for today. Again, we're going to leave you now as the market continues to drop. If you are in the market power program, I hope we do keep the signal, keep it live, and have a trade for Monday.
Yeah, and what
Um,
a great year we're doing, right?
yes, so Market Power Classic has not lost any trades this year. I think how many we had, like 8 trades so far for the year, something like that.
No, I think
So,
it's a little more. It's more than that. Yeah.
really?
Yep.
Okay. So, um, and then yeah, so double dip didn't work today. We don't have enough time for that one, but that's okay. Um, Phoenix should work out, the one that you did yesterday. So that one will be a winner. And then hopefully we have a market power day again for Monday that wins, and we'll see how it goes. We've had, markets have been dropping week after week after week. Maybe next week we get a reprieve or a little bit of a pause. But if the oil prices continue to rise, then probably not.
Yeah. I mean, if
So,
they even stay longer, right? This drags on. Um, yeah, a lot of people are got to be watching that.
yeah. I mean, everybody's watching it, right? WTI is up to 98 and a half today. So up 3%. And if there are boots on the ground, that's going to add another $10 to it overnight. If that happens, 10, $15 to it. So yeah, that won't be happy either. The market won't like that. Will be much lower then as well. Um, so really, at this point, there are catalysts to send it lower, not too many catalysts to send the markets higher. So stock pickers market at this point, um, indexes are probably trending lower. So be careful of any put spreads that you have. If
Yeah.
you sold any
Like
put
we've,
spreads, be careful of those. And you know,
and for instance, we already rotated to the call side, right, on some of the indexes.
yeah,
So,
yeah. So that's how you do it, right? The
sure.
option seller gets hurt the most when the market shifts direction. If it's going up and up and up, and all of a sudden it starts going down, that's when we get hurt the most.
Right.
And so but then you have to shift and you have to redirect, which
Right.
is the way done.
But the opportunity is always there. It's always
Yeah.
there.
So, all right, my friends, we will see you next week.
We hope to
Um,
actually see you, Alan, next week.
I hope I can get this video thing fixed. So, yeah, but we'll see you all next week. Have a good weekend and trade with the odds in your favor.
All right. Have a good weekend.